I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, friend, and colleague, Mr. Nick Hodge, who, of course, is also an investor and the publisher of Daily Profit Cycle, amongst the many other things that he does. This is the 303rd episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets, we're going to talk corruption, we're going to talk markets heating up, and we're going to talk about some of the wonky stuff that always seems to go on in these great United States of America. But first and foremost, how are you today, Senor Hodge?
Doing very well, Senor Del Real. I'm looking at my cat here. He's stalking this group of doves out in the snow. They've come to get some pine seeds or something, and he's trying to sneak up on them very fast. We've had some snow here in Spokane, so quite frigid. How are you?
I am well. I am, as you know, I tend to be the optimist amongst our group and just kind of in general, right? And I've been excited about 2025. I've said that I thought it was going to be, especially in the junior resource space, a really, really good market and a really hot market that heats up slowly and then all at once. And I'm starting to see the water boil and start to really, really go. Seeing a lot of deal flow behind the scenes. Excited for that. We'll talk about that later on in the premium portion of the podcast. But a lot of stuff is starting to work, and I'm excited about the positioning that you and I have done over the past couple of years in anticipation for this market. So I want to get to the broader indices. I want to get to gold, of course, which again, another all-time high here this week. But before that, I'd love to get your take. You're the more balanced amongst the two of us, Nick, on the junior resource space. And we've both traveled recently at the Vancouver Resource Investment Conference. I've taken meetings all week. I mentioned last week that I've written more checks in the past couple of weeks than I anticipated. And that's a good thing. That's usually a sign of deals that are just too good to pass up coming our way. And by extension, that's good for you all out there and for our subscriber base, because it allows us to sit at tables where we can influence outcomes for our subscribers and be able to offer that, right? And I think to that end, we have a webinar that we're putting together here next Friday that I'm really, really excited about. That Wednesday is Wednesday the 12th, correct?
There you go.
There you are. I had the 12th right. I didn't know it was a Wednesday, but I'll be here, folks. I promise. But you all should sign up for that out there. Even if you're not an accredited investor, it's a private placement webinar that explains the process. Look, I wasn't always an accredited investor, right? I had to work up to that. And if I'm, if I'm being honest, I was eager to check that box when those opportunities started presenting themselves. But, with time, it happened. And what one of the few smart things, I joke that I do 5 things well in life, Nick. That's the running joke between my wife and I, between myself, actually. But one of those 5 things is I like to be early on things that I tend to see, in far off distances. And so I taught myself about private placements before I was even eligible to participate in them. And so when the time came that I could check that box, it really has just super, super maximized my return. So I'm excited for that. I'm excited for this market. I'd love to hear your take on things. Am I just being happy, excitable, Gerardo?
No, I'm scared myself because I've been I've been optimistic this week as well. I was given a couple of interviews and doing a bit of writing and looking at the charts and the markets as I do, and things in our corner of the world look pretty good. You mentioned gold, it hit multiple all-time record highs in the past week or so. Silver looks really good to me, actually, following suit now with gold. If you know me, I'm not always bullish on silver for sure. There's a couple of years there in 2021 and 22. I was giving presentations about it not going to the moon. So I think it's got a lot of catching up to do. Copper looks pretty good. These related stocks are starting to move higher. I see the TSX in general starting to catch a bid, and then I see some things starting to turn, right? Like I sent out an alert this morning to Foundational Profits about softness in bond yields and in the dollar, and I think that's going to be more tailwinds for the metals, right? And we'll see. We'll have a Fed meeting in March where we could get additional tailwinds to this market, but anyway, all that said, a lot to like here, and I'm feeling pretty optimistic. I wrote a check alongside you for the first time since October, and so deals are starting to percolate. And just to take a step back, we'll be having that webinar on Wednesday, February 12th. and it's free to join. So if you're on Daily Profit Cycle, which many of you are, we'll send out an email and you can just click to join. You don't even have to sign up. And we'll have some landing pages out there, and then the next couple of days, if you're not already on Daily Profit Cycle, you can sign up. But we'll take it from the top. You mentioned being accredited. You mentioned checking the box. Someone was telling me recently that people don't even know what that means. So
Yeah.
we've got to start even more simpler than that, and join just to find out what is an accredited investor. You might be one and not even know. So it's worth your time to join just to hear the answers to those questions. And then of course, one of the ways you and I have made the money we've made is in private placements, as you say, and there's numerous reasons for that we'll go through in the webinar next week. And most importantly, we'll invite you to participate alongside us in a couple of upcoming deals. So there's not always quality deal flow, and
Yep.
some of these deals often open and close quickly, so we're not able to do marketing and advertising around them. There's simply not enough time to go out and invite new people into the fold, into the group. By nature of the work we've done, by nature of our history in the business, and by nature of us owning a couple of companies in the resource space and publishing space, we're able to now set these deals up where we can have a little bit of lead time and then take a little bit bigger allocations. And we're excited to bring people into those deals because, well, frankly, they've been working out quite well. And we'll talk about some of those names later, but you've heard us talk about them on this podcast for the past couple of years, right? You likely know the names. And of course, there's the super big wins, right? Not the least of which was Patriot, which you got people into at 16 cents in a private placement before it ran to $17. So I'm excited for that webinar, putting together my slides and the outline, and hope some people can join us there. You'll be able to ask questions live. It won't be like this podcast where you have to pre-submit. And so we're looking forward to it. Wednesday the 12th for sure.
Well said, sir. I want to say hello and a big shout out to our international audience. We have, surprisingly, when we switched over to the premium side of the podcast, we had a lot of people from around the world that followed. And so, obviously we see the names and we see the locations and we track all of that. And so it's been really, really great just seeing the diversity of geographic locations that our audience resides in. And we definitely do not take that for granted. So shout out to our international audience out there. We appreciate you following over and hanging out with us every Friday and listening to my ranting and raving and Mr. Hodges' unique and intelligent insights. Let's get to those unique and intelligent insights. Overall indices, we had an episode, I think it was the last episode and the one before that, where it was largely about how consequential the Trump presidency would be for everything from corporate tax rates to capital gains taxes to immigration policy, you name it. And look, we're starting to see a market that believes it's risk on again. And I think what the market is sniffing out is something that you and I have said would be the only recourse if mortgage rates and interest rates continue to rise despite the Fed cutting, and that's QE, right? And I think the market, and gold in particular, is sniffing out that the only way to get the rates down, the rate cuts aren't going to do it. They're going to have to go in and start purchasing in the open market like we have in the past. And that is, I don't want to be too technical, but it's hugely bullish for the gold stocks. It's hugely bullish for risk assets. It's also a way to prop up housing, because if you can get interest rates down lower, then you can afford more house, then more people qualify, so on and so on and so on. So what is your take? Do you see that also kind of playing out the way? Do you think the markets are sniffing that out? Because I look at the broader indices and look, right before the Trump presidency, markets were sideways and it was kind of directionless. And now for the most part, it looks to me like it's risk on and things are bullish across the board, even in the major indices.
Well, let's talk about it. Here's the sideways thing that you were mentioning. Election is right here. The market gapped up, super excited about the Trump election, and then went on to all-time highs. You recall last July, this was the Japanese yen carry trade freakout.
Yep.
And then we just climbed a wall of worry to new highs into the election, uncertainty around the election, and then back to new highs. I think the market's got to do a bit of digesting here. So things are turning. You mentioned bond yields just there, them wanting to get the rates down. That's one factor that's playing into it. We can look at those in a second. But what I see here is a couple of lower highs, right? You see this all-time high made here at 60, just above 6,000 back here the last week of January. And then we've been making lower highs since then heading into February. And I think the market's just doing a bit of digesting and figuring out what's going to come next. There's also been some wild-ass headlines out there, if I can cuss for 1 second. I mean, we've had trade wars that lasted a couple of hours, and DeepSeek, and we're eliminating the IRA and a bill for the Department of Education. We'll get into some of that stuff, but I think the market's just sort of wondering. And, I'm a small government guy, to be sure, and I read some of those headlines, and it's like, it's great to see some of that stuff. And at the same time, my brain wonders, well, what comes on the other side of that? And I think the market's digesting a bit of that right now.
Yep.
We'll look at yields for 1 second. I'll try to get through a couple of charts here. So we had been saying, rates have been going up. That's what you were saying. Mortgage rates have been going up since the Fed started cutting. They're largely tied to the U.S. 10-year. But since, the middle of February here, January 14th, we've had a rolling over of yields. This is a pretty big move right here for bond yields. And that's what you're talking about. That's what Trump is talking about. That's what Scott Bessent is talking about. Trump said he was going to get more active with the Fed, and he was going to, make them, do something to lower rates, which is what you're alluding to. And so these lower rates are good for gold. The other thing I would say is, rates also go down. The long end of the curve can go down when it sniffs out a little bit of slowing growth. And this isn't a recession call, but it is just putting it out there in the universe that the first quarter growth could be slower than the fourth quarter growth, and the market prices those things in terms of the S&P and the 10-year yield there. So caution, just a cautionary tale. I took the liberty today to sell a couple of positions just based on this turning over. I want to wait and watch sort of for the balance of February, but I do think the market, the S&P for the rest of the year is going to be good. Just that all trees don't grow to the sky. And the other thing I've been noticing out there is rising volatility. So let's just look at that for 1 second, right?
Yep.
Very complacent for all of last year. This is the Japanese carry trade unwind, right? And then the market went completely complacent, VIX back down to 12. And what it's been doing here ever so slightly is creeping up. So whereas the S&P is making lower highs, this VIX has been making higher lows, which means smart money out there, people that buy puts for protection are buying more puts for protection. So I don't know what they see, but they see something. And so until this VIX cools off, just something to keep note of there. What's the Fed going to do? Look, Trump knows how to, grease the economy. A lot of people call him President Pump, and so he did a great job. He did a great job with the tariffs.
Only the smartest people.
That's
a lot of people say it.
Exactly right. So I don't know. That's a pretty good macro overview. I think metals look really good. Again, tailwind from that pullback in bond yields and dollars. So, and the other thing is sector rotation. So I know we mentioned it last week, but that stock market is still near all-time highs, despite Nvidia has fallen out of bed. Google fell out of bed this week on earnings, was down 7 to 9% in a single day. Those are big moves for $3 trillion companies. So to see that and not have the S&P crashing or correcting, and to not have the VIX up at 20, it's good to see. It means the breadth of the market is widening, and other sectors are performing well, including the sectors in which we dabble.
A couple of things there to touch on that I was just kind of thinking about as you were saying them, and you said that beautifully, by the way. You mentioned, I mentioned Trump, and you mentioned policy, and you mentioned, I'm a small government guy for the most part as well, right? I like efficiency. I like to see less spending, smarter spending. What has been reported by the media on all sides is the amount of departments that the administration is going after. And a couple of things. That approach is great. It's curious to me that all I see on X or Twitter is Democrat overspending or Democrat fraud, right? It's highly ironic, wink, wink, sarcasm, right? That they haven't found any Republican fraud in any of the Republican states in any of the audits that they've done. That's interesting to me, and should give you, the public, an idea of, yes, it's good that they're approaching, searching out for fraud and making sure we're not spending money on stupid things because we don't have the money. But also, watch the way that certain things are reported by certain outlets. The left does the same thing, right? So that part is curious to me. The other part that's curious to me that not many people are talking about, and again, you said it well, is I'm not getting the what happens after the Department of Education is gone. I'm not getting the what happens after the IRS is abolished. I'm not getting, any of that. I'm not getting any direction or guidance. And so it's one of two things, like this Project 2025 thing that we talked about pre-election that was floating out there. It seems like a lot of what was on there is the playbook. But the what comes after part is a part that I think the administration has to start outlining, because it's one thing to just blow things up and blow departments up and offer buyouts, get rid of the FBI, get rid of the ATF. But great, like fantastic, sure. What replaces that? How is that replaced? How much savings are there? How consequential are getting rid of those departments? We have to, as a public, we have to start asking better questions. And even when I see, press conferences, which to Mr. Trump's credit, he's been out there and he's busy as hell. You could like it, you could hate it, you could disagree with it, you could love it. He's been busy. He's been an active second-term president that is out there earning his position, whether you like it or not. He's made himself accessible. I don't see enough people asking those types of questions. All I see, and sometimes justifiably, is outrage. Right? You want to turn, Gaza into fucking Morrow, Gaza. I mean, come on, what are we doing? Like, what are we doing? Right? You know what we're doing. And without getting political, this isn't political. This is, a genocide. It's ethnic cleansing. It's literally taking a people, blowing them to smithereens indiscriminately, and then getting on stage with the gentleman doing it and saying, hey, you keep blowing it up, and then we'll come in and rebuild it, and we'll own it, and we'll put some beautiful hotels. It's oceanfront property. And so, that lack of disconnect with just humanity does bother me. But again, I still don't see on the substantive stuff that it actually is happening, the audits that Elon is doing. I don't see the counter policy that comes after. So I do want to see what that next step is before we just buy out all these employees, end up with no departments, no oversight, and then what?
Well, we'll see. As a libertarian and a free market thinker and free market backer, you have to assume some private things would step up to fill the voids, right? The market provides, is what a libertarian would tell you. About the Department of Education. Folks like me send their kids to private schools, so I'm relatively disaffected by that. But yeah, lots of outrage out there just for the sake of outrage, right? I see a lot of left pointing, Elon Musk wasn't elected. Why does he have the authority to do this? And it's like, wait, if there's this rampant government waste and fraud, and of course they need to point it out on both sides, but you should be all for like cleaning that up. And of course it's rampant, right? I mean, people are shocked or whatever about whatever the headline is, $8 million worth of subscriptions or USAID or buying out the CIA. And it's like, you guys know the debt number, right? Like, it's $37 trillion. I've told stories on this podcast about, people I've hunted with that were in the army that came back from tours in Iraq and Afghanistan. And the government was just throwing shit in dumpsters, brand new, expensive equipment shit, right? Like the waste out there is there's so much that of course they're going to find so much, and you should not be upset about it. Like, there's a reason you and I write 6-figure checks to the IRS every year, man. I mean, they're desperate for money because they spend too fucking much of it. And so, all for the military protection and the services that those guys and gals provide, but at the same time, and also a relatively an anti-interventionist. I think that the Iraq wars, to point some fingers at the Republicans, which you were talking about earlier, I think those were boondoggles, right? And so I think they'll find a lot more, and I encourage them to keep going. I actually get some amusement out of it, watching the partisans freak out on both sides of the aisle, and then watching the tit for tats, because you don't know, that I don't play those games. But to think that the government isn't wasting millions of dollars on whatever it is, billions of dollars, the trillions of dollars.
Yeah, trillions.
It's like they're doing it, man. It's the grift. It's the NGOs, which we're now seeing, like, and I've talked about it on this podcast before, right? The people who have six-figure salaries and Ivy League educations that are on the government teat, essentially, right? Thought leaders and whatever it is, talking about the social programs in Serbia and this, that, and the other thing. We made a Sesame Street in Iraq that cost us millions of dollars. Like, that's not the government's business, man. And,
Yep.
a part of the inside of me has a really big smile that some of this is being brought to the fore,
No
and
doubt.
fingers are being pointed at it. And, you're allowed to say other things now, right? Like, not that you weren't allowed before, but I feel like there was a different aura or a different, something in the air that, limited what you were allowed to say, or had people react a different way. I think with Trump in office, there's, I don't want to say more freedom of speech, but more freedom to really say what you truly think without the repercussions of wokeness or the repercussions of political correctness, because politicians aren't correct. Hardly any of them are, right? And my wife was asking me, and I'm not a Trump guy. Like, I didn't vote for Trump, but I like a lot of the stuff that he's doing, man.
Sure.
Even the transgender stuff. Like, I wasn't going to take it all the way there, but like executive
Yeah.
orders to not have boys play
Yep.
against my daughter in basketball. Like, I am all for that. And I think a lot of people are as well.
No doubt.
And then I see people like here in Washington, they did a thing. We're not going to enforce that. It's like, I'm pretty sure the people want you to enforce that, man. Like, there was,
Yeah.
there was a pretty clear mandate, right? So, what else was I going to say? I was going to say something else. I lost it when I went into the social stuff there. Oh, my wife was asking me, like, where did this Trump come from? Like, where was this Trump the first 4 years? And I think there was a learning curve, right? I think the establishment is established, which is why it's called the establishment. And the first go round, he had a lot of those establishment people surrounding him and in his cabinet, and were the people he appointed. And this time, you get a lot of I was telling her, I made a joke, outsiders, right? I was like, tell me something I didn't fucking found 15 years ago. Like, you get these outsiders coming in here now who aren't afraid to point fingers and ruffle up feathers. So anyway, a bit of a rambling answer there, but cut it to the bone, man, and then see where the chips fall, and let the market and Americans figure it out from there. We've done so since the 1700s.
Well said. I will add. We highlighted on this podcast during the election that, or I highlighted during the election that I thought the reason he won was in large part due to Susie Wiles, right, who is the White House chief of staff now and was the campaign manager. And one of the quotes that stood out to me early on in the campaign from her was that her job was to make sure that all the clowns that used to come around the White House the first go around didn't have access. And so when I saw a report this week that all of Elon Musk's access goes through her and she gets to decide, what he sees and what he doesn't see, doesn't mean she's going to get it all right. I do feel like there's an adult presence in the room that Trump trusts, that has proven herself to him. And again, whether you like Mr. Trump or not, she has been an incredibly effective, first, now chief of staff, and before, campaign manager. And I think there's definitely an adult in the room with the White House staff, and I think she is a positive presence for Mr. Trump. And look, the Trumpster's got an opportunity here. It's the biggest political comeback in history. He's got an opportunity if he can get immigration right, if he can get, some of the programs that he's focusing on, like DOGE, right? If he can make those be as nonpartisan as possible and effective as possible, he's got a generational opportunity to have a great, effective presidency, right? And so we'll see which way that goes. The narrative is, the old Dave Chappelle joke, what are you going to do if Trump gets reelected? He said, I'm going to enjoy my tax cut. Right? That's that part likely true, but he does have an opportunity to move the needle on some of these other issues, and he's got a mandate. So again, I'm hoping, I'm hoping that we do immigration right. That one's a big one for me. Let's see how it goes. But yeah, go Doge, go find some more waste, cut it out.
Yeah, a couple more points there. I see a lot of the anti-DOGE, anti-Musk sentiment is, who is this unelected guy to come in here and do this? And to that, I have a couple of points. Your federal fucking reserve is unelected. The Democrats ran an unelected person for president. They switched out the candidate in anti-democratic fashion. I don't want to hear about unelected people, right? So that's one thing. The other thing is checks and balances, which is what our founding fathers put in place with the Constitution and the way they set up our republic. And some of the things are blatantly unconstitutional, right? Like birthright citizenship, like that's in the Constitution.
Yeah,
and it's already been blocked. Exactly, right?
Yeah.
So, and two federal judges have already said that. So I still have faith in the Constitution and the checks and balances system of the United States. And then last on tax cuts, because it's the Democrats aren't the tax cut party for sure. And I've seen them attacking Trump for the tariffs, calling it a tax on the people. And Tim Walz, who you might remember, running for vice president along with
good old Tim.
He's governor, right? He's proposed tax cuts to offset the impact of the tariffs. And it's like, yeah, man, you want to cut taxes in Democratic states? Like, let's go for it. Let's go. And then last thing, because this is our therapy session, I got to get off my chest. These motherfuckers here in Washington are giving themselves a 16% tax raise over the next 2 years while we've got a $12 billion budget deficit. And they've literally called me a villain for being a wealthy individual that has to pay the capital gains tax. That came out of a Washington state lawmaker's mouth, an email that was revealed that she sent saying we need to vilify these people and call them what they are, the villains that are the reason that we can't or whatever, raise taxes or meet our budgets or whatever. And to her, I say, fuck you. And the other thing is we have polls now that have come out from the Chamber of Commerce here in Washington saying that the majority of the folks in the state, they don't think it's a lack of tax revenue that was that caused the $12 billion budget. What do you think it was, Gerardo?
No.
Excess spending, right?
Imagine that.
And they don't think the solution is raising taxes. They think the solution is cutting spending. So these politicians need to get it through their thick heads where the heads of the American populace is at, because it's not with the majority of them.
This is called mathematics, Washington State. It's called math. It's a universal language, folks. I sense a hint of city council action in your future there, Mr. Hodge. I think there's a place for independent voices that actually own companies and employ people and know about healthcare premiums and know about some of these everyday things that the citizenry could benefit from. So, I mean, I would encourage you to be active on that front. You're young. You can't be bought. You don't have to be bought. You're not, on your knees begging for the next 16% raise. I think you could be effective in there, man.
I've gone to one already. I went to a Spokane City Council meeting. Didn't like a lot of what I saw there, but I'm doing my cursory research. You can sign up for your 2 minutes. I'll go up there at some point and give them 2 minutes of my lip for sure.
I like it. I'm looking forward to it. Let's bring it back to the markets real quick. Gold. I hate agreeing with banks, right? I think inherently banks are just another institution that preys on, those that need that need prayer but need to be less preyed on. And so in general, that's how I feel, right? But I saw Citigroup, I saw a couple of other banks increase their price targets for gold. And that's how you know that this run and likely the QE that's coming, that I think is coming, is not going to be a one-off. This isn't going to be a one-year bull market, folks. This is going to be sustained. And so, when I'm seeing $3,000 price targets for 2025, those banks typically are pretty conservative on metals forecast because they don't like signaling that the economy is in trouble. They don't like signaling that maybe the Fed is out of pocket. They usually fall in line with those institutions. It's curious to me on this one that even they see the writing on the wall and are trying to get on the right side of it. Any thoughts there? And thoughts on the gold price and the silver price? I know we talked about it earlier, but technically, how do those two look?
I mean, the all-time highs is the strongest technical indicator you can generate on a chart, Gerardo. They beget more of the same. I think gold goes to 3,000 in fairly short order, and I'll tell you what decided that in my mind. We we had the Monday freak out after the tariff weekend. The days seemed
Not to
blur
be
together.
confused with the freak off, everybody. The Diddy freak offs, Monday freak out. I want to clarify before somebody writes in. It's, oh my God, Nick and Gerardo are at the puffy freak offs. No freak off. Monday freak out.
I have to tell you, before I have to write down so I don't forget we're talking about gold. But I watched some of the Grammys the other day, and I saw your girl on there who I didn't know before, Chappell Roan. I was jamming to some Pink Pony Club, boy. That's a nice tune, I'll tell you.
Man, I was at ACL and she had the largest crowd I've ever seen. And I've seen Billie Eilish perform. I've seen everybody perform at ACL. She had, I think, 120,000 people out there watching her. So she resonates with people, man. And again,
Yeah.
she's one of those young kids that doesn't, she leans left socially, clearly. But she's tired of the system, and she's tired of the games that both sides play. And salute to her. The Grammys, by the way, I really enjoyed them. They were well done this year.
I didn't watch the whole thing, just a couple of the performances while we were making the dinner or whatever. But yeah, Pink Pony Club, I think I'd like to check it out, man. You asked about gold, and I was talking about the Monday after the tariff weekend, where Bitcoin was sold down to 94, 95,000, while gold was going up, and it solidified for me, what people reach for when the shit hits the fan, and it's the gold, right? And if we're talking about these ongoing tariffs, trade wars, Fed stuff, etc., then I think it's all the reason in the world for people to continue buying gold. I found myself even wanting to maybe top off my holdings, looking at silver hit 32, 33, and then I got my little Costco connection magazine down there on the floor. I wasn't going to talk about it, but it just I remembered. Well, now that we're talking about gold, there was a full page ad in there for the gold bars on Costco.com talking about how you can buy with your credit card and get the points. They don't charge you a fee, so you can get the cash back from your credit card. Plus, if you're an executive member of Costco, which the Hodge family is, you get like an additional kickback, right? So you can technically get a discount for buying gold through Costco. I thought that was very interesting, and so it piqued my interest enough to go check out the page, precious metals on Costco.com, and there's none there, Gerardo, unless you want to buy like the big bar.
Interesting time. So gold looks great. Silver push past 32. They've tried to push it down below 30. They have not been able to keep
Silver
it
looks
below
good.
30. I think it runs to 35 here in pretty short order, folks. For those of you watching the not premium portion of this podcast, this is the part where it behooves you, if you're in the markets at all, to just pony up, to use the pony language here of Chapel Road, to pony up the $99 a year that I think it costs for this podcast. It's $99 a year. Is that still the case, Nick?
$99 a year. Yeah, you can even pay
Yeah.
monthly if you so choose to make it even cheaper. So let's just look at the silver chart for 1 second, because why not?
Let's do it. And then where I was going while you pull that chart up is, here in a minute, we're going to get into talking some picks and some names that are going to do phenomenally well, and some that are starting to run. Just perfect timing. So yeah, but pony up the little $99, everybody. Get on the Express and come hang out with us afterwards on the premium portion of the podcast. The stock picks will usually, knock on wood, will more than take care of themselves and take care of that $99.
So look, this is like the B-52s on the door, baby. It's banging on the door here. So you're at $32. You see, that's it lines up perfectly with recent highs back in May and June of 2024. And the only thing that happens when a candle pokes through this red line here that I just drew is what you said: silver goes to $35 an ounce. And yeah, I think that happens fairly soon. You can see it in the equities as well. And then, we're getting into earnings season here for these stocks. Newmont will report pretty soon.
Yep.
And then everybody will fall into line. We'll start to see that these metal companies are generating some serious cash flow, and I think it's going to beget new eyeballs in the sector, coupled with what I already talked about, the rolling over of the tech sector. That was two of the things that I've been calling for, is increased earnings to bring in generalists and a rolling over of the tech sector to bring some money out of there. And both of those things have materialized now, and so this chart looks pretty damn good to me. Leaving all the industrial things aside, I've never been we need the silver for the solar panels guy, right? It's always about the chart and the technicals and the macro for me. And this chart and the macro setup for silver looks pretty good. And this is also interesting. Let me do this for you real quick, and then I'll shut my mouth because I feel like I've been talking a lot. But it has a lot of catching up to do. I've seen a lot of versions of this chart going around over the past week from Rick Rules and other folks. But if you pull this back to a key date in like, I don't know, 1971, for example, let's get there. You look what happens here to the chart, how high gold goes since it was decoupled from the dollar back in 1971 under Nixon. And look how much catching up silver has to do. I mean, I'm not a big gold silver ratio guy, but to me, if gold is walking the dog here, the fucking dog needs to catch up, and there's going to be a lot of money that's going to be made as that happens.
I couldn't agree with you more. Again, we're going to transition here in a second to the premium portion of the podcast where, we have some picks. And look, I've talked about these names. Some of these are not new names. They're names that a lot of you already know. However, I will caution, Nick and I have a couple of new names, checks that we wrote here in the past week that we can't talk about quite yet for technical reasons, things going on that we're working on. But we will be highlighting those here in the coming weeks and months. And I'm talking earlier stage, tiny market cap, 50 to 100-fold upside top type stocks in the gold sector, in the lithium sector, in the precious metal sector with some silver there. Those are the stocks that really excite me, Nick. And I know, we talk about, different stock picks on the premium portion of it, but you've gotten to know me as good as anyone in this business. And I like getting big positions really early when nobody is looking, and collecting those warrants, and when possible and when not, just buying in the open market and then just waiting for a thesis to play out. And my God, is it fun when the thesis starts playing out. And nobody likes anything at 15 cents, but they love it at $1, right? They can't get enough. And then they love it at 3, and then they love it at 5. That's fun to me. We have a couple of those coming up that are newish ideas. But I'll leave that there. And again, I encourage everybody to spend the $99. Come on over, hang out with us on the premium side of things. Anything else to get off your chest, Nick, before we get to that premium portion of the podcast?
Not off my chest. I did that already. Just one thing to add about the private placements and the Canadian mining shares that I've been thinking in my mind, and I haven't said out loud. And then I was talking to somebody on the phone the other day, and he reiterated to me. He was saying, they just got a payout, and it was in US dollars, and he was saying how much more it was when it came in Canadian dollars deposited into his account, right? And so that was the point I wanted to make. So I just looked it up, right? You're buying Canadian dollars for 70 cents on the US dollar during the trade war spat of 2025 that lasted 5 hours. It went down to like 65 cents, right? And so I know you noticed this, or maybe you don't, but when I fill out my subscription documents,
I do.
which is part of the private placement, and I go to send my wire, which I send in Canadian dollars, and I rectify that with how many US dollars actually came out of my account. You can buy so many more shares now, Canadian listed shares priced in Canadian dollars with your US dollars that, you can get a bigger swing at the pitch, to use a baseball analogy, right? You can buy more shares because your dollar goes so much further. It'll be spring training time here pretty soon.
Couple of weeks. I'm excited for it. We added some power with Kyle Tucker. We're chasing a third baseman. We added some really good pitching that we needed. That's what caused us not making the playoffs last year, was a lot of the bullpen not being able to close games out after the 7th inning. So we got the pieces that we're missing, and maybe one more big domino to fall in place. And really excited, like I always am, about 2025, Nick. So with that being said, thank you everybody for joining us on the non-premium portion of the podcast. I am Gerardo Del Real, along with my colleague, friend, and business partner, Mr. Nick Hodge. This was the 303rd episode of our weekly therapy session that we call Investing in Bizarro World. It's going to be a fun year, everybody. Be positioned, stay ready, so you don't have to get ready. Words of wisdom, Mr. Hodge? Send us off.
I told you last week about your Valentine's gift. I'll reiterate. I got mine ordered, and we've got dinner set. So don't forget your Valentine's plans, and we'll catch you here next week.
Have a good one, everyone. Take care of yourself.